Good morning. Good morning. Good to see everybody. We're going to give it the normal minute or two to get the stragglers in. Make sure everybody's audio is on. Let me know that you can hear me and see my screen. Morning, press. Good to see you. Wonderful. Thank you, sir. Okay. Well, here it's bad weather across the country. How's everybody holding up? I've got to get out and get the snowblower out. I don't Now that the kids are gone and I work from home, I don't have to commute much, but it makes me get a little complacent with getting my driveway cleared. So, Fred, okay, Fred, very cool. Thank you for letting me know. All right. I hope you're extra careful in the weather too. Cold here, some stuff. Yeah, I'm expecting like 5 days more of snow in a row. It's supposed to be pretty nasty. Welcome, everybody, to the Market Watch Group Midweek Check-In. I am Scott. I will be your host. Here are the disclaimers as usual. Please understand with this educational and illustrative purposes only. We are not investment advisors. Past results are not guaranteed to produce future performance. All right. Good morning from Rhode Island. Palmy, 51 degrees. I'd take 51. It's 13 where I am. Living under winter storm watch conditions here. Today's agenda. Excuse me, still fighting whatever I'm fighting. Okay. Today's agenda, we are going to look at our opening analysis. We're going to look at our posture to see what's going on and if it's holding up. We're going to look at mindset for any open trades. I'm not going to say that I try not to panic. I try never to let emotions kick in. But I would definitely categorize us in a somewhat precarious position right now over the next couple of days. Are we able to get through this hump, or does the potential escalation signal hold? And I just want to make sure I'm ready to react quickly. That's a we have to balance that mindset. We have to be careful with that mindset, because acting quickly means we are prone to, like, oh, we see the wrong signal and we quickly shut everything down only to realize that wasn't the signal. So be careful, particularly as you navigate intraday. Make sure you're waiting for the full opening range information. Make sure you're convinced when something happens. Excuse me. There we go. Took some profits yesterday. Hope to get more today. Love it, Bob. Love it. Fabulous. Michael said, I have Discord already from some other person. Cannon, how do I add you? You should be able to add our servers, what they call it, I believe, using the link that I sent you. But let me look and see if I can find what the instructions would look like if you already had it. But my understanding is if you click that link, it should walk you through the process. But if it doesn't, let me know. Okay, setups. We may still have setups. That's what's interesting about what we're doing right now. And we'll talk about trading plan progress of the week. So let's get into that. Here's our opening information. We're flat. We were slightly down, and then we popped up for a minute, and then we popped back down. The Dow did the same thing. The NASDAQ did the same thing. The Russell did the same thing. So when you look across the board, we're minus 0.04, minus 0.01, minus 0.04. Now, remember, yesterday we started down, and then the market recovered. So don't allow where we started to influence you. That's just where we're starting. We have to watch the market. We have to let it establish its range. We have to see which way it breaks from that range before we're able to say, "Oh, okay, now we're missing something." JP Morgan set record for 2023, but headwinds are building. Right? Okay. Okay. We know that earnings are starting on Friday, particularly for financial companies. I believe there's 4 or 5 big ones. I don't know if JP Morgan's one of them. Did they didn't just report the earnings? Is that what they're talking about? Let me see. I gotta see that. Uh, Here we go. JPM. Yeah, I didn't think so. They're reporting on Friday. Steven said on Discord, there is a green hurricane symbol that will allow one to connect to other servers. Go into Discord, click on the symbol, find Market Watch, and select it. Does it let you join if you don't have the link? I think our room is limited to if you have an invite link. I might be wrong. I'll look into that, but yeah, you can give that a shot. Here's the thing about JP Morgan. I mean, if it's on our watch list, this thing is fantastic stock. We're just waiting to see if it's going to pull back and provide a new entry opportunity, possibly post earnings. At this point, you've got today coming up, then you've got Thursday, and then the earnings are being announced before market. So that's it, 2 days, and then they report, and then we'll see how they respond. U.S. futures muted in countdown to inflation. So what the market is evaluating is whether or not the expectations from the Fed are overblown, and that the market got just a little bit ahead of itself, and that's what caused some of our early year consolidative behavior that we've seen. If you look at the expectations, you can see, of course, this month's meeting, which is at the end of the month on January 31st. There's no expectations for a cut. It's 95% that it's probability that we stay the same. It's when we start moving forward and we go look at March, we see we're at 2-1. Now, remember, at one point we were at 5-1 for a cut. And we're all like, wow, that's quite aggressive. I think this is more in line with my thought. This actually, I had it at 50-50. This has it at 2-1 in favor of a cut. And then when we look at May, you can see there are no expectations, hardly any, that it will still be down. So there's a good chance that it's cut at least once, and pretty good 1.5-1 that it's cut a second time by the time we get to that May number. So that's where we stand as of now. What's likely to impact that? Well, this week, we know starting tomorrow, we have one of the Fed's favorites, and that's CPI and PPI. They're for evaluating inflationary data. We have normal job. We haven't had any data this week, right? Credit. You can see credit went up. We expected that to happen. Deficit stayed about the same. Now we're looking at tomorrow's news being jobless claims. As long as it stays, in the low twos, we have no concerns whatsoever there. But we're watching the CPI, and we're particularly watching this year-over-year number right here. That's going to be the most important number right there. We are down to 3.1, and it's expecting. They're saying that may tick up a little bit. Now, what's funny is, if it ticks up, you'll see the news articles like, oh, inflation went back up, but it's already built in. This is what the expectations are. Concern would be if it was 3.3 or higher. That would be concerning. And the market would be like, oh no, they're going to leave rates. They're going to leave rates high. longer because of that. And we know that the Fed has definitely indicated that they are open to that. If it comes back 3.2 at 3.1 or 3%, oh yeah, the market's going to love that, because the expectations will be that the Fed, with inflation continuing to come down, can move forward thinking about interest rate cuts. Again, it's not catastrophic if it comes back at 3.2. That's in line. That's where we are. That's already where the expectations are. So that's going to be an important one for us tomorrow. A couple of Fed speakers. Then on Friday, we have PPI. And it's just a continuation. So it's consumer price index versus producer price index. And yeah, we'll see what happens with that information. Okay, let's just take a quick peek at our posture and how it's holding up right now. Oh, I guess I don't have it open. Let me grab that posture real fast. Where are we? Market posture. Here we go. Okay, so we currently are a 6. We've come down. I know some of you may be a little higher, some may be a little lower. As we look at what's happening this week to sustain or to start to show concern, well, look, we bounced. If you took the trades early enough in that confirmation, you probably have some profits. Like Bob said, he took some profits. If you got in late, you might still just be kind of sitting in those trades. What are my concerns with this market right now? First and foremost, if this bounce fails to produce a higher high or even the same high, then I'm concerned that our VIX is going to, it's not what I wanted. Then I'm concerned that our VIX, if I can get there, that's concerning. Like I said yesterday, if today we get a bullish day and this thing comes all the way back down here to this previous 12.35 level, then I'm okay. And I feel like, all right, we're it's still not fantastic, but we're shedding off some of this escalated volatility. But if we doji today and we can't get back below this 12.75 level, there's the opening bell. So we'll go watch the range here in just a second. But if this thing holds and then turns, that makes this a higher low than this. And that's 3 in a row. Now, so far, it's been moving up in a muted fashion, somewhat of a small, tight channel. The concern with this is that at any given time, it broadens. And when I say broadens, I mean it goes like this. Whoops. It goes like this and shoots on up here. Like you can see, it has very easy for it to do. And when that happens, it has a tendency to continue escalating into periods like this. This is what the VIX looked like in September and October. And we remember the difficulties we had trading in September and October, right? You remember that. And that's what the VIX looked like. We want to, if that's what we get into, that's going to significantly slow trading down, reduce risk, increase our profit taking and scaling strategies when we do take trades. This is all the same things we did in September and October that we've kind of shed during the November, December months. The question is, do we keep the conditions we have or go back? Steven says, well, the concerns you have on VIX, will that correlate with the inflation numbers? It depends on the reaction. So if we get a negative reaction and the market starts to sell a little bit and this starts to increase, then yes, that would likely be the catalyst. I absolutely see inflation as being the highest potential for the catalyst of what's going to happen today. Now, if the market can push strongly today, and you can see, look at that VIX, it's trying to push down. That would be fantastic. That would definitely ease my concerns. But I want us to be ready. Let's even talk about what would my hedge be real quickly. Let's just bring that up. So let's go back to the SPY, and then we're going to get through the watch list. Yeah, this looks pretty good. We'd love to see this happening. Where are we now? We're around 475. Yeah. So the first thing I'm going to do is I'm going to look at what strike price. I go 5% out of the money. 451. I might just go to the 450, right? The round number. So there's always more action at the round numbers, such as 450, 455, 460. There's plenty of action at every strike price. You don't have to, but I might. So if I go 451, let's just say 451. And when I look at time, I'm going to go 5 weeks out of the money. So that would be, we'll go the 19th, 1, 2, 3, 4. The 5th week is the 16th. That puts me, I like that. That puts me at the standard February options, February 16s. And I'm going to see what those are trading at right now. Since we use the same option most of the time, we start getting a sense of how the price is. I'd be hoping to catch this under $140. Let me see if that's indeed the case. So February 16 options. And if I drop the hedge while I post it, yes, done. Absolutely. Absolutely. That'll be a precursor to the alerts that are coming soon. Let me go down to $1.24 right now. Yeah, $1.25. So they're exactly where I would want them to be. By the time we get the signal, they'll be a little more expensive, right? Obviously. But as long as I can get those for $1.40, $1.50 or less, I'm going to be okay with that. And then we'll go from there. Okay. What else? So short-term score, as of now, it looks good. As long as it doesn't turn back over to make a lower high, I actually am going to leave my score alone. This looks good. It's helping to establish another point, and that will help us to try to evaluate what the new trend is that we're moving into. As we look at the long-term score, as I said, just because you have one red candle here, just like this, you can easily get one right back, and then a pause, and then get 3 more. So we're not going to let the fact that we're lingering around here unduly influence our trading posture. It should have some influence, but we should still be willing to trade. That's not going to change either. As we look at volume, nothing new for volume. And if you notice, we're about to shed. We're going to lose this day. So by the time we come back and we get tomorrow's action and Friday's action, this is what we're going to see. And if you look at this, it's really shifting the profile a little bit now, right? And this volume is likely to drop to 0. So even with nothing else happening, there's a good chance our volume is down to 0. And that means our score drops if everything else stays unchanged. Major markets not likely to change. We're already at 0.75. Sector rotation's not likely to change. It's as high as it gets. If it ever changes, it changes down. So the question then is the VIX. Does the VIX give us something to work with? And again, if the market just gives a little bit more and this comes back down, I think the VIX number is going to stay the same. So my expectation as of now is we're on track for a 1/4 point drop, which would be not concerning to me, but it doesn't mean that the market has shed what little concerns we see developing right now. We have some concerns. Okay. I can live with that. That looks fine. Let's get to the watch list. We know the news that's coming out. We know what's happening. Okay. Has Apple done enough to make us think it's broken a consolidation? No. What it is doing is it's giving me a better chance of trying to draw the line. So as of right now, when I look at Apple and I think, what does Apple need to do? I'm going to look at it like this for now. Now, if it drops from here and then breaks out of it, great. Once it breaks and takes out this, then I think to myself, I'm closer. I'm closer, but what do I still need? I still need to see this thing give me the higher low. Minus that pattern, nothing. We're waiting, we're watching, we're spectators of Apple. I'm not trying to call the lows of Apple and figure when the sellers are done. I want to see something more happen. Can't remember how to get future days on the Thinkorswim chart. Yes. Settings. This little settings cog right here opens up a nice world of options. And you can see once you get into these settings, you have time axis here. And under time axis, you have this expansion area. I put mine about 20. That's about a month's worth. So you can see I can get these earnings floating out here, things like that. And then you just say, okay. So settings, time axis, expansion area, and that opens it up. Why is Apple not showing us the bounce? Well, because what we're bouncing off of here is a lower low, right? And it's a pretty significant lower low. We're under the 50-day. So at this point, the concern is, especially now that you've seen, we got 1 day, then a little less, and then a little less. This tells us that the sellers, and look at your volume, right? There's just the buyers don't have enough to take control. Remember from our foundations lesson last night, with trend being our first step of any technical analysis assessment, who's in control? That's the first question we should be asking ourselves. And right now, for me, sellers are in control of Apple. Sellers have done, look at the last few days and say, who's doing more? Clearly the sellers are. I need that to clearly indicate a shift, that the buyers are trying for a smash and grab, and then the sellers aren't able to oppose them. As of right now, whatever the buyers are trying, the sellers are not, they're not impressed. That's what I'm waiting to see change. Aflac, yeah, you can see a lot of sideways here now. I'm losing my interest in Aflac. AIG is staying strong. So of these two, you can see one is standing out more than the other. So what are we going to do? We're going to bounce Aflac. I don't want to keep watching it. It's not that strong of a stock in the first place. So if you look at AIG is absolutely moving into a setup position in line with its trend. It looks fantastic. If this stabilizes, yeah, I would say I've probably done 5 trades on these insurance companies, and I'd say 3 of them were on AIG, and most recently, this looks great. If this stabilizes here and starts to turn, well, then this trend is likely to continue on up. So as far as setups go, we still have one right there. There's the start. I'm going to make a note of these so I can, that's it, bounce. That's it. Do I have I love working off of note cards, but I think I ran out. Am I going to write this? Okay. Here we go. AIG on the list. I still think we're going to have a quite a nice looking list. AMD. If you took AMD, if you're in AMD, and AMD and INTC are my two horses, I missed NVIDIA. But if you're in it, what are you thinking to yourself? You're thinking, all right, we are hitting our prior resistance level and we have some good gains. Is there a signal to get into AMD? Absolutely not, right? This is when we start scaling out. This is where I would be taking at least that quarter to a third of the position, at least. If you have yourself in a situation like we do where our posture is diminished slightly and we have a potential VIX hedge signal developing, you might go ahead and kick it to a half, close half of it, and then say, okay, can we now get through? And if not, we close the other half. So that's definitely how I'm looking to manage this. Seems like a couple of others are in this trade as well. Yeah, this one it's a great trade. There's plenty of profits there. It's just a matter of what are we going to do now that it seems to be failing to get through that resistance level. Amazon gave a signal. It gave a bounce signal right through here. That was one that we talked about. Yeah. Now what? Nothing. It looks great. It's not quite, you can see I left my line there, and that line is still valid, and we still have a little bit of space. Let's see what happens. But same thing, when it gets close to 155, scale out, start taking some profits, start peeling some off. Yeah. But those were both from our list of high quality candidates. AXP. AXP is setting up, in my opinion. The trend is still good. We just made a new high. Now we're going to watch the sellers. And if the sellers don't, I'd put my line around 180. Between 180 and 175, it's iffy. Anything at or above 180 for a higher low, plenty of time before earnings. AXP looks good. Boeing. Oh, poor Boeing. Apparently they're finding loose bolts and things that you really don't want to hear them saying that they find on airplanes. Not good. Yeah, there's nothing here. Not for a while. BK. I'm not putting this on my list. I mean, it looks fine. It's just there's 2 days before earnings. There's not really a setup here. Okay. BLDR was one that we had already looked at. That was anticipatory there. Still could have gotten in. Now it's moving. At this point, if someone's like, am I too late? Yes. This is the third day of Heiken Ashi. It's the first. So for me, I mentioned Heiken Ashi yesterday. For me, Heiken Ashi candles, there are two types generically: transition and momentum. So transition candles look like these, small. They might have shadows on both sides. Right? Those are your transition candles. Momentum candles look like, well, like these or like these. Those are your momentum candles. This is a series of momentum candles. Once we're on the third momentum, it's like, okay, it's too late. If you're in these trades, it gives you the ability to move your stop, move your stop, move your stop. And if it keeps going, we keep moving our stop, hopefully walking up as this moves higher, like we could have done back here. Move your stop, move your stop, move your stop. Just keep on trailing behind it. You could have walked it all the way up. That's what we're looking for. So fantastic for helping manage trades. These Heiken Ashi candles really give us clear indications of momentum, but it's a secondary because it's a calculated, right? Heikin-Ashi is an indicator, meaning it's calculated. Our standard candles are price action. It's plotted. Michael says they did not do proper maintenance on the Boeing planes, a typical problem. I hear you. My father, rest in peace, had a 30-plus year career at IBM, but his first job was actually as an engineer at Boeing up in Seattle, Washington. He was only there for a little while before he went to IBM instead. A little bit of trivia. BLK. BLK, it gave a signal. It's not really moving. It doesn't have much time. If I was in this trade, what would I do? I'd stay in it. I would give it 1 or 2 more days before getting out, because it still found this support level. It's still starting to move. The sellers haven't come in. It's just that the buyers have taken a break for 2 days. Yeah, okay. But I would be ready to shut her down pretty quickly as we get closer to earnings. BX never signaled. It really never signaled. You can see here we got a little bit of a pinch on the stochastics, but this is not much of an entry candle. I would have wanted to see it more up here around 124. So this is continuing down. Citigroup, love it. You can see the area where setups are developing as of right now are in the financial sector. What's interesting about that is financials will start reporting earnings on Friday. If those earnings are good, we'll get signals. If those earnings are not good, and we see some gaps to the downside on earnings, well, then we're going to probably ease back from financials and then see what comes next. But as of right now, our 3 setups are all coming from the same sector. Caterpillar gave a trade back here, in the trade now, and I would still be in the trade looking for it to get up here to at least 299. Capital One, kind of sideways, nothing there. Oil tried to shoot its shot, missed, and it's out of bounds now. Costco gave us a signal back here. We said, hey, sometimes it's hard to convince yourself to enter on a doji. There it goes, up to new highs. Costco looks great. If you're in it, what would we be doing? We would be managing it with these Heikin-Ashi momentum candles, right? We would be managing it with these Heikin-Ashi momentum candles. Okay. CrowdStrike. Oh, did anybody catch this one? Oh, I love this one. This one looked fantastic. Right there's our signal on Monday, CRWD. We said technology. Is that Elizabeth? Your first name didn't come through. Is it Elizabeth? Yes. Oh, Elizabeth, well done you. Me as well. Love this one. Oh, it was right where we wanted it. It's looking great. But do we see some slowdown already? Yeah, a little bit. Would I take profit on something like this? 1/4 to 1/3. It eases the pressure. I mean, that's a great move so far. Do I want to see if it has more ability to run? Yes, I do. But do I want to start to take into account that I have a hedge signal potentially setting up? So with those that are showing us profit, we really have to have our management strategy proactively defined. The more we react, the more we open the door for the chimp to come in. It's that simple. Proactive, professor's at the computer. Reactive, the chimp is going to try to smash the keyboard. I promise. Okay. CSS. Oh no, let me get one. CVNA. Is that Carvana? This thing rescued itself from the depths. I get it. I really hope this cough goes soon. It's killing me. Okay. Yes. Carvana. It's trying. I might look at this one in consolidation and say, let me get that consolidation line back in there, that I want this thing to break out of this and then give me a higher low. As of right now, it's just kind of meandering a little bit. That's a tough one because it is still above its 50, and I like that, right? I mean, it had a huge move up and then it gave most of it back, but not all of it back. So I think you could still say that their buyers are more in control than not. What I would want to see is I'd want to see it break out of this kind of mini little flag pattern, if nothing else. So I would wait for this to break and then say, okay, you know what? Now I can go. I can put my stop loss down here. Now my risk is pretty well contained. And even if it gets back up to its old level at 60, that's a nice reward to risk ratio. That's what I would look at for something like that. CSX, railroads. Yeah, look how there's nothing yet. Your stochastics is saying, oh, it might be turning. This to me, I don't like that. It's more of a basing pattern. I just don't see that the buyers are super strong. And we also have UNP. We have two railroads. I can pick one or the other. I do like the railroads. They do look strong overall. Delta, we thought, what's going to happen to the airlines? Well, for Delta, nothing. For American, nothing. For United, actually nothing. Did any of these guys? ALK? Yeah, I mean, Alaska a little bit. Yeah, United came out of it okay. Right? United came out of it. UK, right, Bob? I'm surprised too. I thought they got hurt a little bit more than that, but no, apparently not. DHI. Oh, I'm telling you, I'm like a curse of the home builders. I'm always thinking about it, and I'm like, yeah, that's the signal. And this one had a lot of sideways going into it, and then all of a sudden, bam. Anybody catch that? The home builders? I did not. I watched it though. The diamonds, the Dow looks okay. ENVX. Okay, so this one, it got its signal here, and it looks like it's just kind of fallen short. If I had taken one like this, what would I do? I'd shut it down, in and out. The fact that it was under its 50, the fact that it's dropping back below. But as long as you caught the right entry, you'd be breaking even. So if you're breaking even on your losing trades, pat yourself on the back. That's part of our goal. Fastenal. Yeah, that one's a little bit iffy as well. For sure a win, right? That one's iffy as well. That's definitely a good signal right there. Yesterday it opened lower and then it recovered. Today it's pushing a little bit. This looks fine. It doesn't have a lot of time before earnings, but it's got to move from here. Let's see how this one looks on the Heiken Ashing. Yeah, you know what? It's got to be now or not at all. Meaning, if you're in this, you'll now move your stop up. And if it can go, great. And if it falls apart, you're out. No harm, no foul. Okay. GE. I don't really trade it much, but it did give a signal back here and it's moving fine. So if anyone happened to take that one, good on you. I consider myself the GE jinx. And so I thought I was going to jinx it even by starting to watch it, but I certainly was not going to test my jinx streak by trading it. Hopefully one of you got a piece of it. Gold still looks like it's setting up within the context of its trend. There's something there. Google. Oh, yeah. Google gave us our trade, right? They gave us our trade on Tuesday. Hopefully, if you took it, you took it midway or earlier. So at the bottom half of this candle, and you're in a good spot. It looks great. It's moving. It is at resistance a little bit today, though, right? It is a little bit at resistance. So if it can't get through resistance, do we consider taking a little piece of profit there? Yes. Yeah. So Google, there you go. Should you? I would definitely be looking at some scaling strategy to take some profit because it's always easier to hold some longer if you already have some. You know what, Stephen? Just put the symbol you're talking about at the beginning of your comment. I can go back. So if I miss it, I do sometimes I'll go lightning round and go really fast. So Google looks good. Home Depot. I hope some of you got a piece of Home Depot. That was on our list for Monday. Engulfing, Signal, consumer discretionary. Home Depot and Amazon were my horses. Anybody else get a little bit of the retail action? Let me know. IBM. I bring up IBM a lot. I'm a product of IBM. I have an IBM 25-year Rolex engraved that I inherited from my father. I like IBM. Put me through college. But it's not tradable right now. We took the last effort and it just sort of fell apart on us. And okay, no problem. Made some good money back here on IBM, that's for sure. ICE. So ICE, I said I missed it, and now I feel a little better because I was like, oh, this thing's gonna fly again. It has a tendency to shoot, but it's concerning that it's not moving right there. Intel. So I'm definitely more concerned about Intel, and I've already pulled some. Pulled some yesterday. Looks like the rest for me is going to be today. But that's okay. Is 5 weeks the max for your trades? 5 weeks is for the hedge. That's my hedge time. For buying options, I would say I do tend to buy somewhere between like 4 and 6 weeks most of the time, and I'm really only holding for 7 to 10 days at most. So there you go. Waiting to get back into Intel. Nice. Yeah. Look, the first piece yesterday was a little bit of a gain, and now it'll be breaking even or maybe a little loss, and then I'll wash out of the trade. I'm fine with that. Average quantity that, oh, there is no average, Michael, because it can just fluctuate so much, whether I'm, one strike in the money or two strikes or out of the money, whether the implied volatility is lower or higher, et cetera, et cetera. It could range anywhere from 3 contracts to 20 contracts, depending. I'm a big user of the Analyze tab to construct and understand risk and then how many contracts I need to control the risk. IWM, it wants to try to go, but if it fails and it breaks down from here, that certainly is going to be some concerns for us, right? JP Morgan setting up. All the setups right now are in one sector, and that's financials. And that sector, KKR falling apart, not really a setup anymore. That sector is financials. Oh, can I get a what for Facebook? You guys know I'm a big fan of Facebook. I got this one, and now I have this one. New highs, even stronger than Google. I said I would be willing to trade both Facebook and Google, and they are both doing quite well. Really happy with this trade. Did I pull a piece off yesterday? Yes. Yes. Of course. It was at resistance, showing some hesitation. Was it only a quarter? Yeah, just a quarter, but I took it. And now what? Am I regretful that I took a quarter, or am I grateful that I kept 3/4? I will promise you that I'm grateful I kept 3/4, right? No regret here at all. That's part of that mentality for me, was managing that. Fear of regret is something people just don't talk about as much as they should. Fear of regret is a big one. Microsoft, okay. Oh, now this is helpful. Why am I excited about this? Because we've been in this basing pattern, and we've been saying, hey, this should be the leader. They have a huge piece of AI. This should be the leader. Well, guess what? It's breaking out. Now what? Am I trading a breakout? No, I'm not. What am I waiting for? I'm waiting for the next consolidation. So if this gets up here, this gets up here back to this old high, then it pulls back. That's just a nice little mini cup and handle. I would love to trade into this, looking for that to go there, but I'm going to wait until I see that exact scenario play out. But this adds some enthusiasm to our bullishness, where a lot of it has been diminishing. Netflix, I didn't like that one as much for communication services. It was Google and Meta. Yeah, I missed it. I missed it. I didn't. It was just that. But when we talk about cup and handle, kind of a kind of a convoluted pattern, but it did bounce off its 50. Did anybody trade? Did anybody trade Nvidia? I would love if you did. I would love if you did. My AMD looks great. My INTC doesn't. Bob, you got a piece? Well done. Well done. I picked the other two. That's what happens when we pick horses in sectors sometimes. PCAR, ooh, it tried and it's starting to diminish here. We'll see what happens. PNC coming down, possibly in a buyable position, but it's got earnings, so we'll wait. QQQ, we'll see what happens. RCO, kind of losing steam. That's a bit concerning. SMCI. Oh, that was another big one right there, right? We saw that right on the 50, smashed higher. Love it. Looks good. Snap. Snap moved, but is starting to turn. We're seeing a little bit of that. Here's SPY. Let's look at our opening range and just kind of see what we're looking for. So we opened, we got bullish, and then it turned back over, and now it's right back at the bottom of its range. It hasn't broken its range. Whichever way this breaks, if we break above 475, okay, that looks like we might have a positive day and survive. If it breaks below 474 and we're back down at 473 or lower, I think that's going to really put some stress and have us thinking about that hedge trade. UBS, yeah, it's kind of iffy, kind of choppy. UNP, so that's the only one I'm seeing right now outside of financials. I'd still consider that a good setup. I would definitely want to see it hold this level that it's at. It's above the 200. It's above this old gap level. If it can hold this in turn, viable. If not, yeah, we'll see. The VIX looks okay. It looks okay. We would really like to see that VIX and this market push today and get us down, but we'll see what happens. Wells Fargo, nothing there. Earnings coming up now. So we have a few that are looking okay. The problem with the ones we're looking at, AIG, AXP, Citigroup, a bunch of them are going to report earnings on Friday. And that's going to disrupt the whole thing. So not a lot of entry signals right now. It's mostly going to be managing what you have and watching to see what comes next. Hey, that might actually be okay. Because if you've got great management plans in place and you're tightening stops and taking some profits, and then all of a sudden we get that VIX signal, and with that VIX signal, you put a hedge on, that hedge will quickly turn to a speculative trade, so that if the market drops and you start cleaning up your bullish trades while having some bearish trades in place, fantastic, right? Fantastic. That might actually play out quite well, although we don't want it to turn into a weaker market, maybe just a brief consolidation. If we look at what tends to happen here, you can see we might get a little bit more, and then there is a cyclical pullback that tends to happen in the second half of January. So from a cyclical standpoint, that is something that we'd have to be aware of and ready for. Walmart. Oh, look at Walmart. Did a sneaky little signal on us. Pulled back, held, turned. Okay. I missed it. Nothing you can do. I was willing to, but I don't know. I don't know why. I took my eye off of that one for some reason. XBI, there's biotech, still looks strong, but looking a little overbought. Materials struggling a little bit. Communication services looks great. Energy, no. Financial still looks good, but a little bit pausing. Industrials looks good, and actually here it looks like we should have more setups. So maybe I'll look through industrials a little bit more. Technology still looks good, but we need to see it move. Staples still looks rather tepid. How do we get earnings on the chart? You want to make sure of a couple of things. Number one, for equities, You want to make sure that you have corporate actions, show corporate actions. That's dividends and earnings and splits. I haven't seen any splits for a while. And you want to make sure that your time axis is set to give you some space out here to the right. I like 20. You can see it gives me just a nice little bit out there. If you start to do too much, people are like, oh, I'm going to put 50. Look, it's like, why? What do you need over here, right? And so for me, 20 is the right amount of action out to that outside. All right. Lastly, trading plans. You should have well-defined market posture. I've been including all the videos, so you should be able to watch the component videos for each of the components that we look at. You should be able to see the broader perspective of what we're looking at. But make sure that you are working on that section. How do you translate your market posture into your day-to-day trading posture? How do you have as much proactive strategy in place for scaling, for moving stops, for taking profits, for tightening your stop philosophy? When do you end the trade? All of that, the more defined it is, and that's what should be influenced by your market posture. When my market posture was weak, I'm taking half profits the second I have them, 2 days, 3 days. Now I'm trying to get 4 days, 5 days before I take a quarter or a third. Those are the things that should be shifting automatically and that you should be taking into consideration. All right. Well, there we go. I feel pretty good for the midweek check-in. Finished up the first. Okay, you know what? Steven sent me a document with his 100 trades. I would love if you shared that with me. I'd love to see your first 100 trades. I would love if you guys would give me permission, and I could certainly, like not say whose was whose, but take a finished sheet and show you what I would do with that with somebody if I was coaching them one-on-one and just use it to guinea pig. Maybe we could do that on a Sunday. Press said he would love to share. Oh man, you're amazing. Your willingness and openness. I love how this group works. Yeah, send it to me and I'll definitely bring it up on Sunday and we can chat about that a little bit. Just talk about what would we do with this information now that we got that first 100 and then how do we take it going forward? No problem for Steven as well. Amazing. You guys are amazing. I appreciate you. Thanks for coming out, everybody. It's great to see you. Hey, we're in a fine place. We have a plan. And I will check on adding Discord to an existing. Absolutely. And I'll let you know. Thanks, everyone. Have a great rest of your day. Be safe in the weather, wherever you are. And as always, happy trading.